all you wonderful money masters and treasure hunters out there. Welcome. It is terrific Thursday, and the PGA Tour, they have teed off. They are at the Houston Open. And talk about Chris DeMarco, he's actually tied for third. He's only played one hole, but he's tied for third, and he is even par. Folks, hopefully you are off to a great start of your day. You absolutely should be. I know I am, and I want you to be, and I want you to take yourself, make sure that you put yourself in a peak state of mind, peak mental, peak physical state of mind. I always do that by going to my favorite spot in the universe. It's right there over my left-hand shoulder, and I want you to be able to have a piece of the rock, if you will. And thanks so much for joining us. You know, for everyone listening to us on the radio, thank you so much for doing that. All of you others, I hope you're following us on TigerTV. Just go to the homepage at TFNN.com, click on the link there, or better yet, over on the right-hand side, you'll see an area where you can click that will allow you to bookmark this page so that we are only one click away from your device, whether it's an iPhone, an iPad, an Android device. And that way you're able to follow along, take a look at my screen, take a look at the charts, whatever it is that we're doing. You can always give us a call, 877-927-6648. Now, I'm going to be with you for the next 2 hours solid because there are folks that took some massive action. They signed up either for the Tiger Dollar promotion that we had or my Master Trader series courses, which entitled you to a one-day live session with Tom O'Brien. That is kicking off, or maybe that already is also kicked off. So Tom will be tied up doing that this morning. You're going to have a doubleheader back-to-back. You've got me from 9 to 11, then Mr. Basil Chapman. He's going to be with you from 11 to 1. Then today from 3 to 4, you got Ken Shreve. And then Tom, after putting a full day of a Master Trader Series program, he'll be with you from 4 to 6, folks. So thanks so much for joining us. If we take a quick tour around the markets, you've got the futures, the Dow futures off about 46, S&P's off 6, NASDAQ down 9, the small caps off 3. A quick tour around the world. Everything is red. You've got the DAX off 92 points right now. FTSE down 50. The Nikkei finished off 67, down 67 points out of 10,114. The Shanghai, that was down 34 points. They finished out 2359. And the Hang Seng finished out at 20,609. They were down another 276 points last night. We're going to take a look at that and anything else that you'd like to over the course of the next couple of hours. Again, you can always give me a call, 877-927-6648. So the thought of the day, before we go start tackling these markets here, you know, our goals, if you will, in life, our goal is not to ignore the problems in life. Yeah, we'd love to. We'd love to take all those problems and have a little drawer, maybe a little mental drawer where you take that problem and shove it away. But the goal is not to ignore the problems in life. What the goal is to put ourselves in a better emotional state. You know, not just to come up with the solutions. When I talk about putting ourselves in a better emotional state, it's why I like to take you over to Lanai, or that's my spot, because just in a heartbeat, in an instant, I can go ahead and put myself in a better state of mind. Now, the easiest way for you to do that, the easiest way, if you are not in a good state, I will tell you, if you're not in a good state, or you're depressed, or you're negative, I promise you, you're looking more down than you are up. So just simply take that chin of yours and start looking up to the sky and not down to the floor. That'll help to change it. But make sure you just stand up. Make sure you simply move your spine around, because when you do move your spine, folks, you release cerebral fluid to the brain. That alone just simply sounds like you're going to be smarter, and I want to make sure that you are reacting, that you are responding from a peak state always. So remember, our goal is not to ignore the problems in life, but simply to put ourselves in a better mental, emotional state of mind so that we can come up with solutions. Not just solutions, folks, but solutions that really meet the challenge. And then it's all about taking massive action, just like all those folks did that are on the live webcast right now with Tom. They took a little bit of massive action, signed up for a Tiger Dollar promotion so that they, you know, number one, they made more money on their money. Secondly, they're getting incredible education. Tom's course is archived. In fact, if you'd still like to get it, one way to do it is sign up for my Master Trader course, which is going to be, the next one is in Tampa on the 13th and 14th of April. Then I have one in Boston on the 27th and 28th as well. And folks, if you're just sitting on the edge, maybe you're saying, you know, I think I should do this, but don't know if I want to. Invest in yourself. You know, not only am I giving you unconditional money back guarantee, but maybe what you need are some references. So if you're interested, if you're sitting on the fence, if you're wondering what you'll be able to get out of this, how about just simply send me an email, and I'll send you the emails of the folks, as long as they'll allow me, the emails of the folks that actually attended the Master Trader Series in Denver and let them tell you what they got out of it. So if you're sitting on the fence, folks, get off the fence, take a little bit of massive action. Not the real massive action, be signing up for it, but just take a little bit of massive action to see what some other of your compadres were able to get out of it. And that might help you to make up your mind whether you want to make that kind of investment in yourself. So let's go take a look at the markets. What I've got up here on my screen, I've got the ES Mini that we're taking a look at, and what you are seeing is it's trading down towards the session lows that were put in yesterday at 2:30 in the afternoon. Now, when we were on the air yesterday, I gave you a price point and said that we would see the low coming in sometime around 4 o'clock in the afternoon. I gave you a price point of the 1392.93. If you don't believe me, go listen to the archive of the show. In fact, you can catch the archive of this show on Channel 9. You can catch the archive of the Money Master show on Channel 10. And simply, folks, what I was doing was nothing more. I'm going to go ahead and clean this screen up here. Was doing nothing more than an ABC analysis, some Fibonacci analysis, some sacred geometry analysis. And so when we were talking, when I came on the air, let's take a look at where were we at in the scope of things. We were at about 9 o'clock in the morning. We were right here, just as the market was moving down a bit. You had the market at about the 1406, 1407 area as we were coming on. Maybe it was 1405 as we were coming on the air, and I was giving you a price projection of 1392. Well, how did Steve do it? And if you'd like to learn those tools, that's another reason why you would join me at the Master Trader Series course. We're taking a look at A to B equals C to D. That's what I've got up on the screen here. I'll blow it up a little bit so you can take a look at this. So you've got A to B and equals C to D. Now, what you have here is I show an A to B equals C to D with 3 different levels, right? My 3 different levels are 1 to 1. That's the first level that you see here. There's this little D off to the side. Then you've got the 1 to 1.272. That's this second level. Then you've got the third level, 1 to 1.618. Now, how are you going to decide? Now, how was it that Steve said 1393? That's the number that's right here. Why was it that I said that? Well, the first clue is because you've got clues. The market is always giving us clues as to what it wants to do. That first clue came from nothing more than taking a look at the retracement that we made when we did our B to C leg. That's this leg right here, folks. And so forget about these numbers down here to the bottom. Just simply looking at these retracements. So from the top, which was at 5:30 in the morning, the high out there was at 1417. That was on the 27th, so that was today's 28th, right? No, 29th. So that was 2 days ago. The ES Mini made its high at 5:30 in the morning during that 5:30 session. Made a move down that took it to a price point of 1404.75. Did that at 6:30 in the evening on the 27th. Then it starts its retracement leg. You're not going to go straight down. You're not going to go straight up. You're always going to be breathing. This market was breathing. It did a retracement, and it retraced back into the time frame of 4:30 in the morning yesterday morning. When you take a look at that retracement from the top here to the bottom, what you'll see is the 0.382 retracement is right here. You can see made somewhere between a 0.382 and a 618, likely about a 0.50 retracement. What that was telling you is your move down in your C to D leg was likely going to be more than 1 to 1. Well, it really gave you that clue coming into that 12 noon session. This is a 30-minute chart that we're looking at. This session ended at 12 noon, and what you can see was you had a wide-ranging bar coming into your D point. When you have a wide-ranging bar coming into your D point, it means there's lower prices to come, or sit back and wait for some other signals inside the charts out here. That's exactly what my clients and I did yesterday. And so we knew, folks, that it was coming down in this area. And see this little candle right here? That's a bullish harami. And, folks, that candle there, after moving down here, important candle, not a candle that you would trade off of. Absolutely not a candle that you would trade off of. But what it was doing, it was giving you information. It was telling you, after this long move down here, that it needed to rest. It was absolutely time to rest. It's actually, if you take a look at the Japanese definition, I'll have to look it up during the break here, but I believe it has something, and it's something to do with that what harami means, Japanese to English, has something to do with a woman being pregnant. And so you can see that would be the little baby right there, maybe getting ready to pop out. But this was showing us that the trend that was on its way down was getting ready to reverse, possibly, or at least slow down. That's what it did. And then what you can see here, you put in a doji as it came back down into the 2 p.m. time frame. That said, okay, you know what? Maybe this move is over, or I'm tired. I want to do something else. Then what do? You move down just a bit. You test that low. low that came in at 12 noon, and boom, voila, there it gave you a signal. It gave you a bullish engulfing candle at 3 p.m., coming into the 3 p.m. close. And a bullish engulfing candle, folks, that can only happen at the bottom of a move, and that is where this body engulfs at least the prior session. But if you do take a look at this, this is a pretty strong bullish engulfing candle. Not only did you do the last half-hour session, meaning the 2:30 session, you did the 2 o'clock session. You did the session coming in at 1:30 as well. And let's see here. Did you make it for the 1 o'clock session? 1 o'clock session, you opened at 1394.75. You closed at 1390. Let me make sure I got that. You opened at 1397. You closed at 1397. That's right. So you engulfed five candles. Hey, how about that? Engulfed 5 candles. So taking a look at where we're at right now, we're coming up against that support area. Support on a bullish engulfing candle is going to be the lowest low of the entire group of candles. That's going to be the one that came in here at 2:30 in the afternoon. We're going to draw our line over here. So you can see, even with the market being down right now, even with the Dow being off 49, the ES Mini off 7, you still have not gotten down to the area of support here. Expect that area, looks to me like, expect that area to be tested, if you will. You had another bullish engulfing candle that occurred this morning at the 7:30 session. Still, you know, the bears have a little bit of control right now, but all they're doing is coming up against the support line, folks. Thanks so much for your support. 877-927-6648. We get back, we'll continue looking at these markets.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. Let's see here. You got the futures off, Dow off about 55, S&P's off 8. Let's go to our first caller. Let's go to Jeff in Springfield, Missouri. Jeff, thanks for calling. Thanks for holding.
Yeah, thank you.
How are you doing today?
I'm doing pretty good. How about yourself?
I am doing great. How are things in Springfield?
Hey, springtime has hit, and the weather's great.
Oh, that's great. Now, is Springfield, that's near Lake of the Ozarks, isn't it?
Yeah, we're a couple hours away. We're actually real close to Branson in about an hour.
Yes. You know, I used to, when I was in the retail business, I did business with the Bass Pro Shops. Actually had a location over there, so I played a little golf in Springfield.
Okay.
It was always, I remember I had to fly into St. Louis and then take one of those puddle jumpers into Springfield. It was always a bumpy ride, it seemed like, in there.
Well, it's gotten a little bit better, so we get the regional jets now.
Oh, good. You wanted to take a look at the EUO, which is the pro shares for the Euro short. Tell me what you're doing and how I can help you.
No, actually, the Euro futures contract is what I was interested in.
Okay. So tell me what you're doing. I've got the currency pair, the Euro US dollar currency pair. So tell me what you're doing, and then I can help you from there.
Yeah, just been kind of concentrating on the shorts on it for a while. So that's
okay. And are you in that trade or looking to get into the trade?
I'm not in it right now. So I was. A couple days ago I was in it and did okay. Okay, great. Yeah, cool. So, a couple days ago, so are you watching this on Tiger TV by any chance? Yeah, I just got started with you guys. Oh, perfect. Okay, well, thanks for doing that. So now we got another Tiger. We love it. So what you're looking at on the screen here is this is the Euro US dollar currency pair. This is a daily chart. And so if you got in a couple days ago, that was the time to go short the euro as it was making. The pattern here that you're taking a look at is a Gartley sell pattern. Now, a Gartley sell pattern, first what you want to be able to do is you either want to buy or sell D points. In this case here, what we do is we take a look at moves in the market. Your A point on the euro US dollar would have been on March 15th. The low down there was at the 130.029 level. Your B point was the move up, and that move up went all the way into March 21st when it got up to 1.3284. Moved down the following day. Now, a 1-to-1 A to B equals C to D would have taken a little bit higher than where it actually completed. It got up to 1.34137. Would have been the A to B equals C to D. Where it actually got up to was 133.844. Nonetheless, what it did do was it did this 0.786 retracement. So it did also have this sacred geometry. We take a look at the market breathing, Jeff. I take a look at the market moving back into either one of two levels, either the 0.618 or the 0.786 area. Do you use Fibonacci or sacred geometry numbers at all in your trading style, or are we going to be teaching you how to do that here? Use a little bit of Fibonacci. Okay. Good. So in this case here, you had a nice Fibonacci retracement. It came back to the 0.786 area. And so if you did put in a trade here, which it did start working, then what this really sets up as a target, this is how I would take a look at a target. I would take a look at two minimum targets. The first one would be taking a look at the A to B equals C to D, at least on this pattern. So the A point being that low on the March 15th area,
all the way up to the high on March 27th. And what you can take a look at is the ideal pattern. This ideal pattern would trade all the way down to the 0.618 area. That would be 1.31 and change, 1.315, 1.3148 or so. That would be the full extension of that pattern. And then you want to be taking a look at candles as you're coming in there, because it would give you an idea whether or not it would want to trade lower. The normal spot where it should at least bounce to is this 0.382. Now, that's on the longer term scale. What I would also be looking at in trying to find some type of synergy is this shorter leg, this leg here that just simply went from the low on March 22nd up to the high when you might have got in on the trade on March the 27th. And so if we take a look at the retracement during that leg, what we're going to find right now is that you are already through that 0.382, and what you're moving on your way down to this 0.618. So coming into play at the same point is a 0.382 retracement on that larger leg, but then a 0.618 area on that smaller leg. So what the euro should do on its move down, it should run into resistance, just like if I were flying in the old days, if you will, from St. Louis to Springfield, although the planes I was on, they didn't have the buttons. They would just tell you, fasten your seatbelts and get ready to rock and roll. And it should get ready to rock and roll right inside this 132, looks like 132.3 range, 132.28, something like that. Does that help you at all?
Yeah, that's great.
Yeah, so that's where I think you'll see the euro hit and then bounce up a bit, and then look for a pattern, new ABC pattern on the way down. All right, Jeff?
Okay, thank you very much.
Hey, thanks for calling. Look forward to hearing from you again. We'll be right back, folks. We'll see how this market's going to drop and then whether it's going to pop or not. We'll be right back.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade. You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And there we go. I knew our bell was somewhere in the background. We're off to the races. And you got the Dow trading off 63 points right now. S&P's down 7.5. You've got the composite down 15. Small caps down 5. Wait, I need to wipe my glasses off. I'm not seeing things straight. It says Apple. Wait. Apple. It says Apple's down $3.81. Somebody just took a little bite out of Apple. Cisco trading down a penny. Google off 60 cents right now. Intel off 3. Microsoft down 18. Let's see what's moving, what's grooving. Moving on the way up, you've got Red Hat, RHT. They're up $3. That's up 6%. We'll take a look at that. You've got Annie's Inc. That had a heck of an IPO. That's up 7% this morning, trading out at $38.25. Illumina, the ILMN, that's up $2. You've got FMC Technologies up $1.70. Collective Brands, PSS, they're up $1.60. Let's see, Omnicare, OCR, they're up $1.07. What else do we have out here? Deere Consumer, DER, they're up. Amazon is up 76 cents. Molycorp has been bouncing as of late. MCP, they're up. Walter Energy, they round things up 70 cents right now. On the downside, what's grooving? You've got Creative Health, they're off $4.28. That's down 17%. That is the leader on the way down, percentage-wise and dollar-wise. Apple down $4. As I said, Baidu down a few bucks, $3, traded at $144. Big Lots, BIG, they're off $2.69. You've got Union Pacific, UNP, they're off $1.86. Siemens down. Best Buy, I think that is ahead of earnings. BBY, I think they come out with earnings later on today. They are trading down, slightly down $1.22. That's down 4.5%. Let me see here. Best Buy, adjusted earnings per share, $3.50 to $3.80. I don't know if they've released yet. Let's see here. It doesn't look like it's been released. You've got Westport Innovations, they're off $1. Whole Foods Market, WFM, they're off $1.30. I guess Annie's is up and Whole Foods is down. And a programming note here, folks. I did have things wrong. I am going to be with you for 2 hours. And then following me, following the Money Master show, you will have Kate Stalter. She'll be doing the small cap roundup. I'm sure she'll be talking about Annie's Inc. And then Basil Chapman is going to be filling in for Larry's on the futures hour today. That is from 12 to 1. And if I do have the ES Mini up on my screen here, still that 30-minute chart. And what you can see, as we were coming on to the market open at 9:30, you had the ES Mini close right at 1392. That was right into the support that I was talking to you about that occurred yesterday at 2:30. 1392 was the low on that. That is the support of that bullish engulfing candle, trading just above that right now. Let's go take a look at the NASDAQ index futures, just to take a look and see what's out here. In order for this market to go down, this line has to be penetrated. We've got to see a close below this, and then we're going to have to see conviction for a couple days. This, if you go all the way back to December 19th, folks, you take a look at this trend line. This thing has been on one nice tear. It's been a nice, steady rise to the top here. It looks to me like that's probably, I don't know, I'm not that great with angles. Is that 45-degree angle there, folks? I think it's around that 45-degree angle. So a heck of a nice move. That area here has held as support and resistance. You can see when the market broke through it on March the 6th. That was that one-day wonder. The following sessions it came up, tested it on the 8th, tested it, if you will, on the 9th, and then busted through that on March the 13th. You are really right now just simply trying to come back into the March 26th breakout. We'll see where it closed. You can see yesterday, it tried to break through that area. What's that all going to be about? Well, that's all going to be about Apple for sure. You get Apple to start moving up, and you will see a close of this above that trend line. That is on the futures there. Let's go take a look at King dollar. Why not? Let's go take a look at the King, see what the King is doing. I think the most important chart out here, because we are coming to the end of the month, really is this chart right here. This is the long-term monthly U.S. dollar chart. This is the channel that it has been in. This is the downtrend channel that it has been in. Now look, folks, you can see that coming off of the lows that were established in the dollar has to go all the way back to April of 2008 when the dollar traded down at 71.05. You're trading well above that. You're trading at 79.40. So don't let anybody tell you that the dollar is at its lows. It is well off of its lows. And you can see here, just simply the pattern that it has been making here. Looks like it's trying to make a W, folks. And, of course, that W would stand for winner. And now what's really important to take a look at on this chart here is you take a look at it has not been able to break this downtrend. When you do break this downtrend, when the dollar index does break this downtrend, you will have a break topside for sure. But right now it's just traveling inside here. We'll see where the U.S. dollar wants to finish off the session. I believe that tomorrow is the end of the month. Must be, right? Yeah, must be, because today's the 29th. So you've got tomorrow. We'll see where that finishes out when we come back and take a look. But I think that this is one of the most important charts, and as long as we're taking a look at those downtrends, just as important probably is the that's the DAX. But let's the DAX just completed a 1-to-1 A to B equals CD this morning. Now, because you are trading inside this lower leg, what this says to me is that the DAX wants to go ahead and complete a 1 to 1.272. These ABCs that I'm showing, these are different than the ABCs that Tom is teaching inside the art of timing the trade that he's doing on his live webinars. But if you just look at the breathing pattern here, the EKG of the DAX, if you will, the EKG says on this C to D leg you came crushing through, says the DAX wants to get into this 67.90. You make a 100% A to B equals C to D right now. It would make sense that you would pause just a bit, and you came into that with a fairly wide-ranging bar. It says to me, lower prices on the way. But if we take a look at the chart I did want to show you, that is this weekly chart here of the Nikkei. Again, the Nikkei in trading overnight finished down 67 points, finishing out at 10,114. This is the weekly chart showing the downtrend channel inside the Nikkei, and you can see that this is going all the way back into the 2009 time frame. And what this area here, I'm hoping, folks, so what we'll see here is the Nikkei pullback, just simply to give us an opportunity to get in on on some of the Japanese stocks that are out there. So we'll see how, and it's important to understand these channel lines because they help you to understand when there truly is a break. These are false breaks to the bottom because this was already trending lower, and so we'll see where the Nikkei decides to close tomorrow. If we go take a look at currency here, let's just continue. Let's take a look at the pound or the yen out there. Let's take a look at the pound. Let's see right here. We'll pull that up on our charts. And you can see the pound has been trading sideways really for quite some time, going all the way back into the early part of January, the middle of January, maybe the end of January, I should say, where it has simply been trading sideways. The range on the pound really being, for the most part, dominant. I'd say the dominant range is the low is in the 156 area, the high being 159. We tested that, and it is slowly trying to make its way down to the bottom area of that range. Let's take a look at the yen. Speaking of the Nikkei, let's see what the yen is doing out of U.S. dollar, Japanese yen. And, oh, that's nice. Let me pull this up here. The yen has absolutely been on a tear. Take a look at the yen. This is the daily chart. If you go back to the highs put in April of 2011 when it was trading out at 85, hard to believe that we say those are the highs, but those were the highs. Traded all the way down to the low when you had the Japanese finance minister step in for trick or treat. It did that on October 31st. It was making a low of 75.61. Made a bullish, I don't care whether you had finance ministers stepping in or not, made a bullish engulfing. Take a look at this thing here. Steps in. Take a look at how many trading sessions this takes back. If you take a look at this goes all the way back to August 4th of 2011, and that bullish engulfing occurred October 31st. October 31st. So it takes back nearly 2 months. 2 months of candles. That certainly, do you think that was a signal? Do you think it's important? Of course, I know the answer to this, but I'll ask you, do you think it's important to understand bullish and bearish engulfing candles, folks? Take a look at what this one signaled. Certainly what happens is the Japanese yen, U.S. dollar currency pair, if you just simply go from the top to the bottom. Now, because this is one candle, I'm just going to move this off to the side, make it a little bit easier for you to take a look at. And you can see what it does is just simply retraces back just below the 0.786 area, and ever since, I would say, February the 3rd, when our markets, which are really key dates to take a look at inside our ETF structures, our markets out there, February the 3rd, well, the yen did the same thing, and the yen never looked back. The yen was absolutely in a Formula One race car because it took off from the lows in there in the 75, 76 area, and a straight shot all the way up to the highs put in on March the 15th when it got up to the 84.17 area. Now, what we might be getting is our first retracement pattern on the yen. So let's take a look at what that might look like. We'd have to start at the high from March 15th. The B point, the first B point that we'd look at is March 23rd when it makes a low at 81.967. Trades up for 2 sessions into the 27th where it gets up to 83.37. Now, what you can take a look at here is as you've come off of the C point, you've come off with, I would say, a little bit of an explosive move to the downside, that being today primarily. The 1-to-1 would take you to 81.61. It looks to me like if we take a look at the retracement. So let's go take a look at the retracement, folks. It doesn't matter. Just like we started off the day taking a look at the futures, the ES Mini, you can use these same techniques on anything that you trade. They work nonstop. So let's take a look at the retracement that it did. Well, what we can see here in how do these numbers work, it does an exact 0.618 retracement. That would say, okay, when we take a look at using the energy of retracement level, that what the Japanese yen might want to do is just a 1-to-1. And now it's important to watch the move as it comes down that C to D leg. And the 618 retracement going from the high of March 15th down to the low of March 23rd, and using your retracement ruler, the actual 0.618 retracement would have come in at 83.33. And where does it move up to? 83.37. You gotta love this stuff, folks. Make sure that you have Fibonacci retracement and expansion as a part of your tools in your toolbox, or come to the Master Traders course. Let me teach you. Spend 2 full days, and let me teach you some tricks that I don't really teach all the tricks right here. Don't have enough time, and but I will teach you the tricks right now. What you can see, what the euro has done, or the yen has done, as it's testing its B point this morning. The low there being that March 23rd area, which was 81.96. You got down to 81.92, and so you've made a little bit of a move. Expect the yen to just pause here for a bit as it starts to create some energy to move down at least to the 81.17. Now we'll just have to see how that move comes. If we just take a look at what the 0.382 retracement might be in that same area, now I'm going to come all the way down from the low, and I'm going to start off at the low that was put in on February the 1st, that area 76.01, and up to the high that was put in on March the 15th. And what we will see is that 382. How about that? You got to love that. So, and this would really just tell you that there would be a strong move in the yen if this is what the pattern it is that completes. So the 0.382 retracement, which is a normal, just a dead cat bounce, just a normal retracement from the lows to the high here, comes right where you would complete an A to B equals C to D. So you're going to want to watch the yen as it is completing its D point. And if that is all the retracement that is done on the yen, we can calculate exactly where the next move would go to on this yen. You'd be going from the low down here, that'd be your A point. This would be your B point, the high. put it on the 15th. You see somewhere right down here at that 0.382 area. And now I've got to really shorten up this chart here and move it off to this. Let's do this here. So it would take you all the way up to, let me get rid of this. And let me get rid of that. So it takes now I can read it. Maybe you can read it too. It would take you all the way up into $89.16. $89.16. Now, what do we have set up at $89.16? Let's go connect the dots. Let's go from its last swing point high, which was in May of 2010, all the way down to the lows that were put in when the Japanese finance ministers came in, and boom, voila, that A to B equals C to D. And this here, because it's only a 0.382 retracement, folks, this would do more than a 1-to-1 A to B equals C to D. This would do a 1 to 1.272. That would be the 91.39 area. Well, when you come off of the retracement high out here in April of 2010, look at that. That would get you a 0.786 retracement. That would be your next Gartley sell pattern. Here, you've got a Gartley buy pattern, because this would be, if this completes, this is the first A to B equals CD move that the yen has had off of the lows from February 1st. So we'll watch to see how the yen attacks that D point. If we go take a look at our markets right now, you've got the Dow off 39, the S&P's off 6. You know, if I just click over there on that ES mini chart, folks, and, you know, without blaring out to take a trade, I certainly was giving you all the indications when we took a look at that ES mini trade here, and you can see right now 1392 has held. To me, it's the easiest no-brainer trade out there with a relatively tight stop, and that is trading the ES mini here as we speak. And so 877-927-6648, Dow off 40, S&P's off 6, Composite off 7. And let's go take a look at Apple, see if they're still taking a bite out of Apple. Doesn't look like it. Looks like they're trying to repair that apple tree. You got Apple only down $1 right now. We'll be right back, folks.
You've always taken the long view when it comes to investing. But what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit tfnn.com today.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. 877-927-6648. Dow trading off 58 points right now. S&P's down 8. And what I do have up on the screen here is the Qs. Taking a look at the strength in the marketplace. Let's go see what they are doing this morning. Apple, somebody took just a little bit more of a bite out of Apple. They're trading down 280 right now. And this is what I call the opening range. And the opening range, folks, I take a look at the Qs. You'll see 4 different quadrants here on the screen. If you want to get just an idea of what the market is doing, or if you were day trading, I'd recommend that you learn these techniques here. Now, on the Qs in the lower right, you're going to see the daily chart. And on the daily chart, you'll see a blue line going along there. That blue line is the 9-day exponential moving average. And what you want to take a look at as far as a trend is concerned, as far as I'm concerned, how I would trade the opening range, when you are above the 9-period EMA, you are looking for bullish outcomes, and so you'd be looking for a market to drop for your opening range. And when you are below that, you're looking for bearish outcomes. So that is used, I use that as nothing more than just a indicator of which way I ought to be looking for the trades. Then what I do is take a look at really the first 30 minutes of trading, which we're about to come into. The first 30 minutes of trading is going to end here in 5 minutes. I break that down into the first 5 minutes of trading because that's where the rubber band is going to be wound up the most, just simply because of the futures markets or overnight trading. And so, you're looking to get an indication what's going on volume-wise, price-wise, retracement-wise from prior sessions. Of course, when I am trading the opening range, I am really only paying attention to today's activity. Now, I take a look at yesterday's activity as you would make moves or retracement levels, but my focus would really be on today's activity. Now, if you just simply have got, so I use a 1-minute chart, a 5-minute chart, and a 30-minute chart. And in order to use this tool effectively, what you want to do is you want to have all 4 of those quadrants on your screen, and you want to stay focused on this and see what information is being generated for you. Well, that first 5-minute session, if you just simply look at we'll just pull up the 1-minute chart here for you. And on the 1-minute chart, I'm simply marking the high and the low of those sessions, looking for some candle configurations. Maybe there are, even on the 1-minute chart, these things work no matter what time frame you're looking at. That's why, I enjoy teaching you these candle patterns as well as all the great sacred geometry here. So when you take a look at the low of that first 5 minutes came in at 932 on the Qs. That was at 67.57. The high during that first 5 minutes came in at 9:34 in the morning. That high out there, 67.67. And so when we take a look at our opening price principle, we've got our first 5 minutes now. When you stayed inside this range here, inside this box, it wasn't giving you any more of an indication other than that was the range so far of that first 5 minutes. You're looking for a breakout or breakdown below of that area to give you some type of signal, volume, or what have you. Well, what do? You break out of that area at 947, with conviction from a wide price spread. Forget that it's a 1 minute bar chart here, because what's nice about doing a show this early in the morning is since these patterns work the same way, I can take a look at candles and give you some type of feedback as to what it is that it's telling you. So you break out of here, and then you have a move up with volume at that 941 during that 1 minute session. Now, what does it do? It comes up and it closes the gap. Now, that gap, which was created yesterday at 4 o'clock, 372,000 shares. As you were coming into that gap, you were coming in with 869,000 shares. So you're completing, in essence, a move, closing the gap. It would make sense that you would start to then pull back, do a retracement. What you'd be looking at here in order to trade this pattern, you'd love to see it come right back down here and test this breakout area where it broke out at 947. I don't suggest that you trade the 1 minute chart. In fact, I'm suggesting you don't. But isn't it nice to be able to look at these formations, breakouts, to understand how it is to trade the markets on your time frames? Thanks so much for spending your time with me. Stay tuned. I'll be up next for the Money Masters. And if not, have a great Thursday, folks, and I'll see you tomorrow morning.